Hello, viewers. Welcome to this episode of Neo Wealth Wisdom, a podcast series brought to you in collaboration between IIM Mumbai and Neo Wealth and Asset Management. I'm your host, Dr. Chiru. In this episode, we are going to discuss something that is on top of everybody's mind these days: gold and silver. The prices have rallied, and like how? Gold has delivered more than 65% in 2025, and silver has delivered a return of more than 160%. Now, what has caused this huge rally in these commodities? To understand, we have with us an expert who is going to help us decode the nuances of the price rally in gold and silver. Please welcome Shantanu Bhargava, the CEO of Digital Advisory at Neo Wealth Management. Thank you so much for joining us today, Shantanu. We'll start by addressing the elephant in the room. Normally, if you look at gold prices and silver prices, you assume that they would be correlated here and there. Gold goes up and then silver follows. Gold falls and then silver falls by a little notch. But what we've seen in 2005 is completely different from what we've known. There was a complete decoupling between the prices of these two metals. Gold went up by 65% last year, but silver went up by 165%. Have we seen this kind of decoupling before? Is it normal?
No, it's a great question. Silver actually is nicknamed the devil's metal because of the volatility it exhibits. It has gone up in a parabolic fashion, and I believe there's more room for it to go up in the times to come.
Wow.
Actually, it's a matter of belief. A lot of investors have still their experiences anchored to what happened back in 2011 and 2008. So back in 2011, silver had exhibited a similar price performance.
How much was the growth, if you may remember?
So it tailed gold back then, but it went up in a jiffy, and it was almost nudging the $50 mark.
Okay.
Which it actually breached again this year. For the longest, $49 to announce remained the resistance number for all these
For
years.
the last 10 years, it was hovering around
That
$50.
number, $50. But like I mentioned, a lot of investors have their memories anchored to what happened back then. So after flirting with the number of 49 USD per ounce, it actually came down crashing in a jiffy, and in a matter of 4 weeks, it was down by 35%.
My God. It's hugely volatile.
Hugely volatile. And the reasons were different. So now let me answer your question about this divorce in relationship between silver and gold.
Yes.
So first things first, just to put things in perspective, this time the math is different, and this time the drivers of price performance are also partly different. Back in 2011, it was a speculative rally.
Okay.
And that speculative rally was actually punctured by the regulator, CME, which is the largest exchange for derivatives in the world.
Okay.
In a matter of a week, they had raised the margin requirements for derivative traders in silver by 4 or 5 times.
Okay.
Which actually punctured the the speculative balloon, and which triggered the sell-off in the paper market.
Sure.
This time, like I mentioned, the math is different. Clearly, silver has evolved from being only a shiny metal to a dual-use strategic metal.
Okay. When you say dual use, what are the two uses?
So first, of course, is it acts as a monetary hedge. So it's part of the overall hard metal complex. So whenever there is heightened fear, psychosis in the markets, and heightened risk-off behavior, we have seen that hard metals actually receive a lot of capital. Money rotates out of risk assets and moves into risk-off assets, and within that, hard metals are the primary beneficiaries, and I'm bundling everything into it: Bitcoin, gold, and silver to some extent.
So like a safe haven, when there is a lot of uncertainty, people tend to put money into these.
Tend to put money into safe haven assets. It's part of that complex.
Which is happening right now because there's so much of uncertainty around us.
Yes. So it's been happening for quite some time now. It basically started in 2022.
Yeah.
And along with that, it actually has got very well defined and accepted industrial uses.
Right.
and that is where there is a break in its behavior from gold. Now, at this point in time, it is actually a bottleneck asset, a bottleneck metal. So the
That there is
entire
not enough supply is what you
there's
mean?
not enough supply, and the entire green energy transition uh, is actually tied to silver as a commodity. All the green energy industries are actually depending on silver completely uh, for efficiency gains, and that's where it has now broken away from gold, so to speak,
Right.
as being um, you know a more volatile cousin of gold. If gold used to go up by 1%, it used to go up by 2%. If gold used to fall by 1%, it used to fall by 2.5%. That was the usual behavior.
Right.
But there clearly is a more fundamental and structural re-rating that has happened in the case of silver, and which partly explains this explosive rise in prices. Yes, there is an element of speculation in the recent price rise that is acted like an accelerator.
Speculation, you mean because gold price has rallied so much, people who have lost out on that opportunity have started investing in silver, assuming that it is also going to go up?
Partly, yes.
Yeah.
So first, people gain conviction when gold goes up.
Hmm.
That part of the behavior hasn't changed.
Yeah.
And people popularly track the gold to silver ratio.
Right.
So historically, it's hovered around, while it's a moving number.
Hmm.
In extremely stressful environments, when there is one-way sell-off in silver, that ratio has actually gone up to 125 to 1 in extreme times. And in more sanguine times, that number is around 65 to 1.
Okay.
Currently, still is in its mid 70s. So, despite the massive jump in prices and the relative outperformance in past 1 year, as like you mentioned, 150% versus 60%,
Yeah.
still there's, as per that ratio itself, there's more headroom for silver to do more.
Wow.
And which is also driving this speculative behavior. If you were to look at the open interest buildup in the case of derivatives, it's actually near all-time high. And what is interesting is that if you were to further peel the onion and see the sub buildup of that speculative, or rather the derivative interest buildup, the retail derivative positions have actually gone up significantly, 2.8x from last year.
The retail investors
The retail
speculating
investors
in silver.
in silver.
Okay.
The retail, what I mean is the retail contracts, the
Yeah.
retail derivative contracts, their numbers have swelled by 280% last 1 year, which means clearly there is a significant speculative interest also driving and propelling the prices at this
Sure.
point in time. It's a combination of a very, very well established fundamental uh, supply and demand mismatch. And what's adding to the recent run, or what was adding to the recent run, was a speculative surge. And very recently now, there are going to be other factors as well. Like China has recently announced that they're going to impose export restrictions
Hmm.
when it comes to silver. So China is the largest refiner of silver in the world. Almost 60% of the refining is done by them, and then after um the silver ore is shipped, bars are shipped to China in the raw form. They refine the ore and convert it into usable silver for
Okay.
all the advanced applications. And if they impose an export ban, they're trying to secure supplies for their own industries. Then, in the near term, given the current supply dynamics, it's going to lead to more increases in the price of silver in the near term, next 6 months out.
Understand. So before we get to that demand and supply, you mentioned that about silver. I have a basic question when it comes to metals. You have this gold, silver, platinum, which are called the precious metals, and they are the other second cousins called the base metals, the copper and likes of zinc. How are they fundamentally different from each other? The reason I ask is gold goes up, people have started speculating in silver, silver has gone up. Will now copper and zinc also go up, or are they completely different and then precious metals have a different role to play?
It's a good question, Dr. Chiru. I'll take a step back.
Yeah.
So, broadly, metals can be classified into two buckets.
Hmm.
So, first bucket comprises of metals that are actually consumed for pure industrial application, like copper.
Yeah.
And then the second bunch of metals are the ones where one where actually investors hide their wealth in, so like gold. And silver actually sits neatly in middle.
Because it has an industrial application you mentioned.
Exactly.
Yeah.
So in the case of base metals, the trades that you're looking for are basically, there is some element of tarnishing. Then silver itself is the best conductor of heat and electricity in the world.
Yeah.
And there are other industrial applications. In the case of precious metals, the general traits are precious metals are rare, they are chemically stable,
Right.
and they cater to the safe haven demand, as you
Right.
mentioned a while back.
Yeah.
So this is the distinction. Now, interestingly, in the case of silver, it's like having a price double engine price driver, basically. So um, in good times when industry is actually booming, so tech industry consumes a lot of silver for various applications.
So if tech is booming, automatically the demand for
Absolutely.
silver would go.
So in a positive economic environment, when we are in a business upcycle, industries are actually ramping up capacities. They will be consuming silver.
Like we are in right now with
And
all
right
the
now.
AI-driven rally that we've seen, right?
Yes.
Yeah.
And in not so good times, when actually your industrial demand is slightly muted, and there is overall fierce psychosis, and there are general dark clouds around, then the shape shifting comes in, and silver then acts as a good monetary hedge in such times.
Yeah.
So basically, because of this dual nature, what you will find is that there is an implied floor in terms of its price now. What used to be completely speculative, there's an implied floor, fundamental floor, because of this dual nature.
How much is that floor?
So back of envelope calculations based on uh, the composition of the total silver demand. Let's take calendar year 2025. So expected silver demand is expected to be around 1,250 million ounce.
Okay.
Now, out of that, almost 30% is pure investment demand. Think of your ETFs and
Right.
silver bars. And then there is some basic industrial, let me call it the traditional industrial usage in terms of conversion of silver into silver jewelry. I mean, India is a big
Correct.
consumer
of
in
silver.
that space.
Sure.
And then you have the new age industrial demand, which is close to 650 million ounce.
So you would take all of that into account and then give me a
Absolutely.
base price
Yes.
of silver, right?
So
Yeah.
all three types of demands have their own elasticity.
Yeah.
So as is the case with price elasticity, it's the change in quantity demanded
Sure.
when there is this fluctuation in price. In the case of industrial demand, that industrial demand that we're talking about, basically consumption by solar PV manufacturers or AI infrastructure developers and electronic vehicle manufacturers, it's very inelastic.
So you have silver getting used in solar PV panels.
Yes.
And then you have silver getting used in AI enabling chips. And then you have the electronics.
Absolutely.
So these are broad three verticals in which silver is used.
So these are the larger ones, four actually. So the largest continues to be electronics.
Right.
So think of 5G. 5G is like a data hose. It's carrying data at high speeds, and anyone will prioritize efficiency. So silver then becomes the choice of metal,
right?
Because you have to make sure that there are no leakages. Alongside, you have your folding phones. So all that technology is actually made possible with the help of silver and silver's conductivity.
Okay.
Then your smart televisions and all, that continues to be the most dominant part of silver's demand.
So if I think about it, all three segments are really firing right now, right?
Yes.
So you have, because of all the green revolution, and then you want to have renewable energy and then the focus on it, the demand for solar PV is very high. and then you have the AI enabled wave which is there, and then people need a lot of chips, and so that is also riding high. And electronics, I assume that people will keep changing their handsets from time to time or their TVs from time to time, and so that demand is also there. So all these three put together is really driving the demand for
Absolutely right.
silver.
Silver. Uh, but there are various degrees of elasticity is there. So the solar PV cell demand is quite inelastic. So the 2030 target of fresh installation is actually 2x of what the industry has been adding every year. It's
Sure.
you know currently it's around 600 gigawatts, and their target for 2030 is 1 terawatt, which is almost 2x of
Almost
the
double,
current
yes.
capacity.
Yeah.
So it's expected to grow at 17% per annum. So it's fairly inelastic. Obviously, there's a breaking point, and we'll talk about it. EV, as you will appreciate, while the EV industry, the electronic vehicle industry, is growing at 3 to 4%, but the quantum of usage of silver in manufacturing is actually growing. So that also continues to be inelastic because it's tied to the whole green transition. And by 2035, a lot of economies are attempting a significant, including ours, a significant transition to EV. So it's also fairly inelastic to the price movements in silver. AI is absolutely inelastic because they will prioritize efficiency over everything else. They're processing major volumes of power, especially the AI infrastructure, the kind of racks that are built by NVIDIA. They actually cannot afford any kind of efficiency losses or accidents by substituting silver with any other metal, say copper, for instance, because the price to pay for any kind of an accident by substitution of silver will be too much for them, compared to the price they're currently paying for silver as a metal. It continues to be a small part of their total manufacturing cost. So in case of AI, again, it has its own growth at this point in time, which is explosive, and the demand is inelastic to some extent.
When you say inelastic, we are saying that even if the price of silver goes up to an extent, the demand for silver from
These quarters
quarters doesn't stop.
doesn't stop.
But then there's got to be some point where the projects become unviable, right? I mean,
Absolutely.
160% growth in 1 year is a phenomenal rise in the cost of raw material of silver.
Absolutely. No, that's a great question. And therein lies the clue for us uh, when it comes to forecasting where it can go. Well,
Yeah.
in extremely bullish times, all bets are off, and we've heard numbers like 600, 650. But clearly, at this point in time, silver is driven more by fundamental industrial usage reasons and drivers than the monetary hedge driver. And if industrial usage is the primary driver at this point in time, out of the total demand, industrial demand used to be 30% back in 2012, used to be 40% back in 2014. It's already at 60%.
Wow.
And it's expected to be 70% by 2030, which tells us that the primary driver of silver prices is going to be the
Industry. So it's
industrial
going to be
demand.
very stable, obviously.
It's going to be very stable. Now, let's look at two scenarios. In investment planning and portfolio allocations, especially when it comes to selecting an investment, it's always a good idea to think about what can go wrong and prepare for the worst.
Correct.
And then also assign reasonable probabilities to what can go right, and then compare these two estimates with where we are in terms of prices. So we are already at 78 as we speak, 78 USD.
Yeah.
So we did some very basic price sensitivity modeling, and we were trying to assess the fundamental floor of silver price in the new scheme of things, basis the relative elasticity and inelasticity of demand of various drivers of silver demand.
Sure.
And when we did the weighted average elasticity calculation, given that 60% is industrial usage, and within industrial usage also majority is inelastic, so it is at the lower band of elasticity. It's very inelastic. Despite the overall business environment, there are certain use cases that are going to remain consistent. On the other hand, if you look at the investment demand, it is actually very, very elastic. It's at the
It's
other end of the
speculative also
spectrum.
partly,
It's
right? Yeah.
speculative, so it can actually evaporate in a massive price surge or
Sure.
in a significant drawdown, which the asset class is notorious for.
Yeah.
And in between, you have applications like jewelry and all. They sit in between this spectrum. So if it's pure industrial is negative 0.3, pure investment is 1.8, and jewelry application, which is like 10 to 11% of the total demand anyways, is like 0.8. So blended elasticity is 0.5. Now, in our stress test, in the first scenario, we assumed that in a given year, let's say the entire investment demand, which is 30% of the total demand today, evaporates.
Oh.
So,
So people are not going to ask you for silver, the industry folks, that is, because 30% of the demand coming from them is not there anymore.
so 30% of the investor demand.
Sorry, the speculative demand.
Speculative demand. So let's say out of 1250,
Yeah.
almost 30% or 365 million is pure investment demand emanating from your ETFs and people in Asia buying silver bars, and
People have just stopped investing because they thought either the price is too high or a small drop in the price also has spooked them, and then they've all
absolutely
got out of the market.
they've gone,
Sure.
and it has happened in the past.
Yeah.
The demand evaporates in no time.
Yeah.
So
That still leaves us with this 70% of the
yes,
industrial demand.
industrial demand, which is fairly inelastic. So then all of a sudden,
Yeah.
So one of the reasons why silver has gone up
Yeah.
so much in last 5 years is it was hovering around 2025 back in 2020, is because there has been a persistent supply deficit year on year in last 5 years. The cumulative number is 850 million ounce, and that number is actually equal to the total silver output today. So basically what has happened in last 5 years is the cumulative supply gap is equal to 1 year's silver mining output, and which explains this explosive surge in prices and which underpins the fundamental nature of this price surge. And this hole in terms of supply and demand is not expected to be plugged anytime soon, because the supply is also fairly inelastic.
So, Shantanu, from what I gather, when we look at the demand side of silver, we discussed that 70% of it is for industrial and jewelry, 10% for jewelry, 60% is coming from industrial demand, and about 30% is towards investments. So today, the way the silver price has gone up, if suddenly people were to get spooked that it's too overvalued or any fall in silver price, they may not want to invest. If suddenly, let's assume that that's become completely dry, in spite of that, you still have the 60 to 70% of the demand which is coming from industry. So that's a very stable kind of a demand growth for silver that we envisage. Now, how is the supply side of silver? Is it keeping up, or it is just where it was?
That's a great question. So, Dr. Chiru, in normal markets, in the case of other commodities or any good, you will expect supply to be ramped up when prices are on rise. That's the expected behavior. Interestingly, that doesn't happen in the case of silver. And the reason for that is when it comes to production of silver, 75% of silver is actually byproduct of mining other metals.
Really?
Yeah, that's a startling number. And around 25% comes from captive silver mines. And as you will appreciate, and this 75% supply comes from mining of zinc, lead, copper, gold. All of these commodities have their own paths, and they are primary commodities in themselves. And the decision to increase or decrease mining is a function of the economics of the primary commodity itself. So the miner will first think about the economics at a copper level or gold level instead of thinking what the prices of silver are, because it's a byproduct. So, which is why this makes for a very interesting phenomena, that despite the surge in prices or drop in prices, there is that constant wall of supply that comes in. And
because
that
any metal that I mine, silver is coming alongside.
So, and that number is around 835 million ounce per year, and it's remained at that number constantly for last 5 years. And the annual demand has exceeded that every year for the past 5 consecutive years, which is why the cumulative gap between demand and supply in last 5 years is actually close to 850 million, which is equal to 1 year's worth of total silver production. And
Wow.
that explains the reason why we've seen such a parabolic increase in silver prices. Of
So
course,
the demand is 2x the amount of
no,
production.
no, not really. So let's take 2025 as a case in point. The actual expected demand for the full year will be 1250 million ounces, and the supply is going to be around 1040, out of which
Okay.
830, 840 is expected to come from mining, and 200 will emanate from recycling of existing silver coming in from various sources. That was also actually gone up. So supply finds price. So at least what we've seen is there is a fair bit of elasticity there, and the recycling supply has actually increased last year quite a bit. But
So it's catching up with the demand right now.
absolutely,
But
and that
still it's in a deficit from what I
it's in a
gather.
deficit. That notwithstanding, you still will be looking at a deficit of around 130 to 150 million ounces shortfall even this year.
And to add to that, there are news, right, in Mexico, which appears to be one of the largest miner of silver. The silver mines are going dry in 2026. They may not be able to mine any further. And so with news like this, one would imagine that the supply is going down. But if I add all the dots and then say 75% of the silver mining is anyway happening as a byproduct, so there's a fair bit of cushion there.
There is.
But you were suggesting that there is a gap between the supply
There is a
and
gap
demand.
which explains the increase in prices, because there's been this persistent gap between demand and supply in past 5 years. That explains the fundamental reason why prices have gone up in the first place. To your point on some of the Mexican mines running dry or becoming inefficient because the efficiency also drops from the same rock over a period of time. That is kind of made up by, like you rightly mentioned, ramp up in mining of other metals. Like for instance, it is well established at this point that copper is in a super cycle, at least for next 10 years. Which means there'll be a ramp up in copper production, and out of that 75% byproduct math, at least 30% comes as a byproduct from mining of copper. So that may make up for this shortfall coming in from some of the mines, like the mine in Mexico.
And so copper being in a super cycle, as in copper again is an industrial commodity, right?
It is.
So again, because of all the other industries where it is getting
absolutely
used.
Primarily, the world is, I think, starved when it comes to electrification, including India, and copper will play the central role in electrification globally. So it is a play on the electrification of the globe.
Wow. So on the floor side of silver, you said that maybe 65 is like a reasonable number.
Yes.
And it is right now hovering around 75, 78. If I were to say that the supply is less and the demand is too high and then the price may go up from here, do you also see an upper band or a limit that it could touch?
Great question. So on the floor bit, let me qualify that for you. So when everything is kosher, things are well behaved, then we expect the floor to be 65, which is based on the assumption that only your basic non-leveraged investment demand evaporates. But as you will appreciate, there's a lot of paper demand for silver expressed by means of derivative contracts. And typically, when there is a slide in silver prices, that basically leads to unwinding a lot of speculative positions, and that accentuates the fall on the downside, which is why in past episodes we have seen the silver metal taking a beating significantly after that fundamental floor is breached. So be it a 30-35% drop during COVID, or again 35-40% drop during the 2011 episode when CME had increased the margin requirements for traders 4 or 5 times, or a 60% fall back in 2008. So then actually all bets are off once you are in that kind of an environment where the metal is sliding. And that may not necessarily happen in the near term because of a few other factors which are more a function of the way geopolitics is playing out. We'll talk about what China has done in terms of imposing restrictions on export of silver. That may actually backstop this. But if there is a slide and we test the fundamental floor, then the next floor can actually be the number of 50, which was the resistance number for silver prices for the better part of last decade and a half.
Wow. So it can fall up to 50 because it's an extremely volatile
asset.
On the higher side, any number?
Exactly. So now that we have established that the industrial demand component of the total annual demand is the more dominant driver of
That's
demand.
right. Yes.
It'll be interesting to basically disaggregate the total industrial demand and compartmentalize it into various industries, and then think hard about at what level some of these industries reach a point of non-viability.
Exactly, because it's a raw material.
It's a raw material. It's a raw material.
You can't. Projects won't be viable beyond a point.
Projects will not be viable. So there is a breaking point at which point the industries that we're talking about will actively think about thrifting, or they will think about substitution. And broadly, we can divide into 4 blocks. First, the primary driver in this explosive growth in demand that we've seen last 4 years is actually the solar PV sector. Out there, at the end of the day, solar PV cells are still a commodity, right? And the price of silver in the total bill of materials used to be around 5 to 6% back in 2021. It is already swelled to 13 to 14%.
My God.
So as per estimates, it becomes unviable when it crosses 20 and becomes absolutely unviable at 25%. Now that number, that point of non-viability, where a lot of low value producers, because silver PV cells are also consumed by different players. You've got retail players who will put silver PV cells on their rooftop, and there are industrial usages. So basically, depending on the use type, the sophistication, the quality of cells also differ. Now, the appetite for a high quality, high tech solar PV cell, which uses the latest technology like TOPCon, is very high. They can tolerate a price increase all the way up to say 100.
Because they can
pass on that cost.
Yeah, pass on the cost, correct.
But the lower quality producers become unviable. They're already in that zone at 70. So what is the behavior? At this point, so by the way, the largest 4 manufacturers of solar PV cells in China last year incurred a cumulative loss of $1.5 billion.
My God.
So for them, the way out of this kind of a situation is to manage silver's volatility as an input. And the industry has responded by doing 2 things. First is they are getting into thrifting. So
what is thrifting?
Thrifting is basically you reduce the total volume usage of the metal in the overall SKU's production. So if, let's say, back in 2015, the industry was on an average using 11 to 12 grams of silver for every solar PV cell. That number is now 6 to 7 grams in the legacy technology. And
how are they able to do that? If I actually reduce from 12 to 6?
So basically, this is part of their overall R&D and innovative initiatives. It's a result of that. The equation for them is fairly simple. Without dropping efficiency much, and the tolerance band for drop in efficiency is not much, it's let's say 1%. If they can pare down the usage of silver, still use silver, but use it more intelligently,
more sparingly, and then
more sparingly, and basically make some design level changes so that the overall efficiency doesn't drop, then they're still able to get by, and they've been able to achieve it.
They wouldn't have thought about it. Now that the price has gone up so much, they're having to put in the effort, right?
Typically innovation happens when your back is pushed to the wall, and that's how industry is responding. Bigger trend is copper substitution. So copper is also a good conductor, but not as good a conductor as silver. But obviously at $75 to an ounce, it becomes extremely difficult for solar PV manufacturers to sustain. So that's where the other trend that's gaining prominence is substitution of silver partly in solar PV cells, where copper is coated with silver.
Okay.
So there is some compromise in terms of efficiency, which is minimal, but there's a significant drop in price, which is 15 to 50%. And the second trend is there are companies like ICO. There's a company called ICO. They have actually been able to crack the technology to replace silver completely with copper without really compromising on efficiency. But it's to be seen if that technology can be scaled up. At this point, if let's say, going back to your question in terms of the breaking point, at 100, you know, all of our industry players are sitting on one raft, and if silver prices keep on going up, solar players get off the raft at 100.
100.
So that's the implied ceiling in terms of the breaking point for them.
Understand.
And given that it's been the primary driver, that's one number. In addition to that, I didn't even talk about electronics.
Yeah.
Because they're already unviable at 75 and they're thinking of substituting. But coming to the other two industries that have been very, very liberal users of silver in the recent past, electronic vehicles and AI. Out there, their tolerance for increase in prices are higher. So in the case of EV, while theoretically for a 45,000 USD EV, even at price of 150 or 160 USD, till then it's pretty viable because the total input cost is less than 1%.
Understand.
In the case of AI, there is no point of non-viability. They can continue to consume all the way up to 400, 450. But even in the case of EV, two things will happen. First, once the solar sector establishes the blueprint of substitution, like any other industry, they will
others will follow.
They will follow and they will use the same technology.
So you're making a case for copper.
Absolutely, there's a massive case for copper, and if you look at the EV math as well. So while theoretically you're talking about 160, 165, 200, but that number at which point they also think hard about innovating and substituting is around 100, 120, thereabouts.
So that gives us a theoretical ceiling.
Absolutely.
At least,
so that's the other end of the book.
Right.
So if we're bookending the price range, at least from a near-term perspective, so let's keep the lower bound at 50, upper at a blended of around 110 is
that
the number.
Itself a huge range, but
it's a huge range.
Who is to blame? Silver is a volatile commodity.
And we are at 78. So that in a way gives you a clue that for someone getting into silver now as part of the portfolio strategy, the risk to reward is fairly self-evident at this point in time.
Shantanu, now let us discuss the rally in the gold prices. Now, gold traditionally is considered like a hedge against inflation. And over a very long period of time, I think the correlation is pretty perfect. But now we can see that the gold price has rallied so much. And if you look at the inflation numbers in India and also globally, especially in the US, they are coming off. So where exactly is this disconnect?
It's a bit of a myth at this point in time. In the recent behavior of the asset class, if we look at the trajectory of inflation globally closely, inflation peaked in developed markets back in 2022. In US, it peaked at around 8.7 to 9%, and the latest print in November in US was at around 2.7%. In India's case, of course, because of food deflation, inflation has crashed to 0.25%.
Structurally, it has come down.
Structurally, it's come down. So clearly, and it did peak, and even last year, it was well-behaved inflation, despite that gold went up. So, Dr. Chi, if you ask me at this point in time, it's more of recency bias playing out in case of gold to some extent, while there's a very strong fundamental driver of de-dollarization playing a determinant role in demand for gold emanating from central banks who've been absolutely consistent backers of gold in the past few years. They've ramped up their purchases, but on top of that, clearly there is some speculative build-up coming in from investors who have looked at the recent performance of the asset class, and there is now some complacency building in the case of gold, and then it's being attributed to expectations of higher inflation, which has actually plummeted quite a bit. Even the forecast is more benign.
So there are two things that we discussed. One is the de-dollarization because of which central banks are purchasing gold. And second is the overall uncertainty in the market being higher than it once was and gold acting as a safe haven. So even if the inflation numbers on record are falling, still investors here believe that there is a fear of a higher inflation in future, or is it just the uncertainty that's leading to people buying more gold?
It's the, let me call it the fear premium. So actually, that fear premium shot through the roof back in 2022 after Russia invaded Ukraine. And post that, when globally central banks observed US's behavior,
Yeah.
when they weaponized US dollars, that they've actually used the SWIFT trading system and access to US dollars as a financial stick for their foreign policy. And which has actually led to this widespread belief amongst central banks that for them to avoid circumstances like the ones that have been experienced by Russia or Venezuela in the recent past, they need to diversify their reserves. And which is why most of the central banks collectively started ramping up their gold purchases, courtesy which the average that used to be close to 500 to 600 tons has actually gone up to 1,000 tons now.
Wow.
So this is the big shift in demand that has actually led to this surge in gold prices, and central banks realize that there's no kill switch when it comes to gold.
Yes.
Which is the case with US dollars. That has been one of the most dominant drivers of gold prices in the recent past. However, at this point in time, we are at a very interesting junction. Let's look at what's happening around us geopolitically. What if this fear premium were to evaporate? So
Right.
already at this point in time, we are aware that there's an ongoing negotiation led by US and European Union between Russia and Ukraine. Even if there's a half-baked truce and if there's further peace achieved in the Middle Eastern region, and combine that with the recent talks that China and US have had, and there's some rollback of the crazy tariffs,
Yes.
from 100%, even if they were to roll back those tariffs by 50%, that'll lead to this evaporation of the fear premium that gold has enjoyed.
Basically would happen. Yeah.
Exactly. So from risk off, you move to risk on. Then investors may want to rotate out of safe haven assets like gold, and may go back to riskier assets like equities. That could play out, and that's a probability in the near term, because we'll see the results of these interventions from
Possibly. Yes.
possibly that's something to watch out for. And the second is this assumption that central banks
Will keep buying forever.
Continue to buy forever at the same pace and quantum. I believe that most central banks have their own ceilings in terms of percentages. For instance, why Poland may be a very small country, but their stated number is 26% of total reserves. In India's case, it's already at close to 12% of the total reserves. So central banks cannot be completely insensitive to the price at which they're buying gold. At 4,500 USD, it is expensive, and there can be some variation. And if there is some fatigue coming in from the most dominant backer of gold, that will lead to some giving up of gains. So which is where it's important that investors who've enjoyed the ride should at least book profits at this point in time, and shouldn't expect the same kind of linear return behavior.
Exactly. Yeah.
Going forward. You might see some kind of cooling off in the case of gold.
Excellent. Thanks so much for your views, Shantanu, on gold and especially on silver. It was a very interesting discussion.
It was my pleasure completely. Thank you.
Dear viewers, thank you for tuning in. I hope you enjoyed this episode and understood what are the real drivers between commodity prices. This is Dr. Chiru signing off. Until next time, take care.